Gonna go with top step 50K. All right, bro. Well, let us know how that goes if you have any struggle. And yeah, wish you the best with that. All right, let's go. Hard K. When should we backtest? Probably not this month. Probably not January. It wasn't the best, honestly. This month is horrible. Let's see, like maybe September, October. All right, we'll do that. 1 month. Oops. All right, whatever, bro. Yeah. All right, cool. So we're just gonna backtest and see how to identify our drawn liquidity. All right. So this is like me personally how I do it. I'm not necessarily looking at day profiles or shit like that. That's simply not the way I trade. So just a heads up. And yeah, so I always like to start on the higher time frame. Obviously, we can go up to the weekly time frame here. Nah, I'm not, bro. That's just not how I trade. Nah, bro, they're great. I told you guys it's a great way to, find your bias. And yeah, so starting off on the weekly here, we can directly see that we're kind of within two imbalances here. So we got this fair value up here, and so far we've been pretty bullish. Got to include this little volume imbalance here. So we got that fair value up here, this fair value up here. All right, notice the way we can I mess up your shit, Messiah. I think this is mine for some reason. I just want to find the, there you go. Perfect. All right, notice how the bodies stay in the lower half. Mess it up is fine. All right, bro. Did you see how market dumped Friday? Why was that? Do you know? Yeah, we know. I mean, we saw. Market recap. There you go. Perfect. All right, so notice the way we stay in the lower half here. All right, we have also this inverted fair value gap here. So I'm not gonna necessarily mark that out because this like higher time frames. It's just a way for me to like get an idea of what the market's doing. All right, and where's it heading? So it looks like we've been kind of retracing here. We drop down to daily time frame here, so I see this daily fair value up here, bearish fair value up here. Maybe you can treat this as a bearish order block. All right, that's fine. But what's important to notice here on higher time frames, again, this daily time frame, is to see how we found some resistance in this area, right? So if you want to take your fib, you want to take the high to the low here. Let me fix the... Oh, hell nah, bro. The fuck is this shit, Messiah? Alright, sorry, buddy. No. It's fine. I'm not messing with shit. There you go. I just want to mark out the dealing range here, so 0.5. Okay, and I don't want this, and I don't want this. Okay, perfect. Okay. So this is your dealing range, right? So you got essentially the swing high to the swing low. All right, dealing range, this is equilibrium right here. And essentially what I want you guys to see is how we are in a premium. All right, here, this is a PDRA right there, fair value gap in the premium of the dealing range. So what we can kind of like expect, again, higher time frame, is expect a retracement and a discount, right? So that's what I see on the higher time frame. If we drop down on a lower time frame now, this might be more clear, but I just want you guys, and I'm gonna keep this daily fair value up here. Why do you only mark the body to the body? There's nothing necessarily wrong with like marking out the wicks, Honestly, it's just because I have a big ass wick here, so I just rather mark out the body, but it's not a big deal. You can mark out this as well. It's the same. It works fine. Size is supposed to be marked at the candle body, right? Yeah, I'm not, but that's correct, C-Booby. That is correct. All right, back to my 4-hour time frame. Again, not much to see here. Just it's better to see like kind of like the market structure shift. So you can either see it here if you want, market structure shift here or here. What's important is to see that price is like actually reacting off this daily fair value gap we marked out. On the hourly time frame, it's even better. And let me actually go to the lower session. There you go. Perfect. Change this shit, bro. I got a lot of to change here. All right, New York time frame, perfect. All right, so good. We got market structure shift here. Let me check if we got any news. All right, I'm not gonna pay too much attention to news because I'm not really seeking to like take trades and like show entry models because like there's no point. I'm just gonna focus on like identifying my drawn liquidities. And yeah, looking at the hourly time frame already, that's a good time frame for you to like identify key levels intraday. All right, so you want to monitor. Go on a 4-hour time frame. Honestly, there's not much to say here, but on the hourly, there's this low. All right, so I'm already pretty bearish on the high time frame. So I'm looking here at, all right, where's the most logical key level for price to retrace? All right, I know that we've been building a lot of, well, I mean, we've been pretty bullish. All right, daily time frame pretty bullish. But we found some resistance in this P area here, which is a bearish fair value gap here in the premium of this dealing range here. So I'm expecting lower prices. Honestly, I think there's a higher chance for price to go lower than to go higher. So if that being said, I can drop down to the 15-minute time frame and we can start to see, all right, well, we had relative equal highs up here. That got swept. We pushed lower. I'll mark out market open. Oh, this is actually market open right here. And yeah, price is already starting to push lower. We have this reclaimed bearish fair value gap here. Okay. Consequent encroachment. All right. I like how the bodies will all close below it and push lower. So this is like very, very bearish in my opinion. A low hanging fruit, which would be this low here, which is kind of like an easy target for you, would be this low here. All right, but then we'll be looking at these relative equal lows down here. So then we can like go to lower time frames. Honestly, 5-minute, not much to say. 1 minute here. We can just play this out and see like, all right, well, where is price going? We took this buy side up here. There you go. Okay. And yeah, let's just play this out. See. All right. So we took this low hanging fruit. Was there a trade for us to take here? All right. So this is the first presented fair value up here. Notice the consequent encroachment right here. This is beautiful, guys. What the fuck? That's actually ICT's 2024 model. I said 2025 earlier. I was wrong. It was 2024. If you go on his playlist on his YouTube channel, you will find this. He talks about the first presented fair value gap and how you can use the new daily opening gaps and new weekly opening gaps as undrawn liquidity. We're going to avoid this because we're backtesting, and I'm not going to, mark out all the new daily opening gaps and all the new weekly opening gaps because, it will take forever. But yeah, low hanging fruit here, these lows. So let's see how price reacts here. I'm looking at this low we marked out earlier. And we're pushing lower. All right. Let's see where we go. We took out this low. That could be, I didn't mark it out, but it could have been a target. Okay, it's low. So kind of pushed higher here. We're back in the first presented fair value up here. Let's see how I react off of that. Find some resistance. All right, you see how important the first presented fair value gap is. And don't hesitate. If you guys got any questions about anything I'm explaining right now, you can stop me and just ask a question. All right, so pushing higher. So usually whenever we invert the first presented fair value gap this way, it's kind of indicating that it's going to go higher, honestly. So I'm gonna mark out this low again just to show that that's what we went for here. And again, let's admit that you weren't a short. Like, it would be kind of stupid. It's all about risk management, obviously, at the end of the day, but it would be kind of stupid to like short here and don't take any partials until this low. All right, you can be very confident about your drawn liquidity, but like feel free, and you should even do this. You should even take partials at lows like this. All right, so you had Actually, oh no, never mind. I thought those were relative equal lows, but you can take a partial here. You should have taken a partial here, leave a runner until this low, all right? Because that's your drawn liquidity, but you should absolutely take partials, in my opinion, before, all right? Like you're, IC said something the other day. It was like, there's nothing like, wait, you never lose when you take a partial or some shit like that. But there you go. All right, let's play this out. Enough yapping. All right, came back up here in the 15-minute fair value gap I marked out earlier. Took these relative equal highs. All right, so again, seeing this first presented fair value gap getting inverted this way, you may want to change your bias. You may want to see what drawn liquidity you can have in this premium. Again, this would be your dealing range. All right, equilibrium right here. How do I extend this shit right? There you go. All right, it's kind of messy, but let me do this actually. Red. What are you guys shopping about? I don't know how to take partials on my phone. Oh, what the fuck, bro? Okay, equilibrium right here. We got price coming back in the first presented fair value gap, and honestly, this would be your most logical target because, well, relative equal highs, and yeah, there you go. So honestly, at this point, we can just like go to the next day because I feel like you guys understand. But let's just play this out and see where price is going. But yeah, it's looking more bullish than bearish. At this point, you're not expecting really this low to get hit, but this can definitely be a target because like this is going to be relative equal lows. All right, these two lows. And that's going to be a strong pull of liquidity because a lot of people long here, and the algo is definitely going to want to seek these lows. All right, at some point. I'm not necessarily saying it will happen today, but at some point. Okay. And yeah, let's just go to the next day because honestly, there's not much to say here. Okay, so next day, let's go on the higher time frames. Again, always start on higher time frames to get a good idea of what's going on. But yeah, the market goes for like liquidity or imbalances. All right, so that's the buy side we went for at New York session. And notice how, all right, notice super important, guys. Notice how we've been in the range, but yet we were able to find our drawn liquidity. That's super important because a lot of people, a lot of like new traders, they're not able to trade this. Like this is consolidation. They're unable to do that. And like whenever in consolidation like that, this is actually seek and destroy. So like, how to explain it? I'm not gonna like go too deep into this stuff because like, it's hard for me to focus, guys. I got so much to say. But seek and destroy, all right? So like, it went for this low here, bam, reversed, went for the high, bam, reversed, go for the low. Like, you get it? You can watch more vids on that. I can send you guys some shit if you want, but all right, whatever. Next day, again, going on higher time frames. So notice how this is a SIBI here, probably on the 4 hour. There you go, SIBI here, sell side and balance by sudden efficiency. Hourly, so yeah, we took this high here. I'm still bearish, right? Because higher time frame, we're still pretty bearish. Nothing changed here. We've just been consolidating for a bit here. And yeah, hourly, let's see what's here to see. But yeah, my eye is looking at these lows down here, relative equal lows. All right, so let me check. Yeah, we do have an imbalance here. It's not clear on the hourly. So like, whenever you have like not choppy, but like small candles like this, because like with experience, you know there's an imbalance here because it's like a lot of bearish candles. So just like go on the higher time frames, so like 2 hour, I'll probably be able to see it on the 3 hour, yeah, a little bit. But yeah, just know that there's an imbalance. There's a reason for price to retrace there. And yeah, so again, I'm pretty bearish here. I'm gonna mark out market open. And yeah, let's see. So again, think about it. All this stuff here would be your dealing range. Swing high to swing low. And yeah, we're expecting this low to get hit. and this stuff as well. If I were to short here, I would take a partial here, I would take a partial here, and I would take a partial here, okay? So let's just play this out, see what happens. All right, price rallied and market open. Nothing wrong with that. Maybe we come back into this inefficiency or take some liquidity. Yep, took the high here, took these all these highs here, relative equal high here. I'm not gonna mark out everything obviously, but let's see on the 15-minute. Mark out this 15-minute high. But you always have to adapt to the market. So like when it if you see the price opening like this, opening bell, so like took out the low and pumped. And again, there's a lot of stuff like I can't use, or can I actually? I don't think you can use really regular trading hours here. Probably not. But there's a lot of tools I cannot use on this backtesting software that I could use on TradingView. So unfortunately, I have to do it without. Nah, they don't have it. All right, that's fine. But that regular trading hours using the opening range gap. That's a great tool, and that's also implemented in ICT's 2024 model. But yeah, whatever. Just play this out. We come into this 15-minute fair value gap that I marked out here. A lot of highs up here. Honestly, I wouldn't want to be in the long here. I would still be looking for shorts. We're going to go for those highs. So mark those out. Get rid of this. And let's see. Oh, big dump. What time is it? 10. Again, I have no clue if we got news here, but what is this for October? We got PMI. No, ISM. Yeah, PMI. And I don't know how to read this shit, but whatever. Big dump. Market structure shift. Let's see if we push lower. We do. So at this point, this can be a new drawn liquidity here, this low. Notice how we've been ranging here, just turtle soup here. We inverted this for value up here. I would not like to be in a short here at all. I would not like to be in a long either. Wow. All right, entering lunch macro, lunch hour. All right, I'm gonna go on the 5-minute now. All right, finally, so yeah, very, very tough price action. I would hate to be in a trade with this shit here, but yeah, we came here. Let's see if during PM session we come lower. But yeah, again, we got some lows down here. There you go. And let's see. Wow. Very choppy price action, bro. I would hate to trade that day. What the fuck is that? All right, next day. And again, keep an eye for those lows. All right, damn, we just pushed higher. Okay, so let's go on higher time frames, daily. And let's see here. I'll get rid of all this stuff. Troll sweep is just internal liquidity sweep, right? Yep, correct. Essentially, that's what it is. So we went into this weekly fair value gap. Again, I'm gonna mark it out. I didn't quite made it to consequent encroachment, but that's fine. So what I want to see here is on the higher time frames, did we hit any key levels? And if so, let me see something here. Yeah. And so yeah, it's looking pretty bullish now, so oops. So took out this low here. Obviously looking pretty bullish, so I feel like we're gonna be looking for longs. We are filling this imbalance here. I feel like we're definitely gonna be closing above it because we got a lot of relative equal highs above here. What is it? Arlet? Oh, that's great pools, but it's just another IC concept. I want to see if we reacted off consequent encroachment, but nah, not really interesting for me to explain to you guys that stuff. So yeah, let's see. 930, cool. Actually, wait. So yeah, then again, like we got a bunch of lows here. We got relative equal highs up here. But because we've been so bullish, all right, I'm leaning more towards longs than shorts here because, in my opinion, price has a higher chance of reaching for these highs than for just dumping and going for these lows. So again, I could be wrong, obviously, but like I would be protecting myself, like having a bullish bias. If I see price dump, if I change my bias just because I panic and see price dump, like I would hurt myself because I'd be likely taking a bad trade and losing money, obviously. So I'm gonna go to the 1 minute and let's see where we go. First presented fair value right here. I'm not gonna mark it out all the time. We inverted it. Horrible price action for now. All right, dump. Again, nothing wrong with price like going for these relative equal lows, and for me to look for a long after. All right, took that. Let's see if we react off anything here. We inverted this fair value up here. Usually kind of bullish, but let's see. All right, 5 minute. All right, pushing higher now. And yeah, now we have these relative equal highs. This would be your dealing range right here, high to the low. So premium and discount, and ideally you want to long here in the discount and target something in the premium. So an imbalance, for example, can be a drawn liquidity or lower highs up here, and finally this one. But yeah, we'll see. Damn. Sorry, bro. You lied, bro. October is shit. All right, slowly but surely we retrace into the premium of that range. All right, so shit. Let's go to the next day and see if we hit that high. And we end up hitting it. All right, here. So that's a good example of understanding, well, how to see, how to use essentially like, how to understand premium and discount essentially. So like you find your dealing range, in this case, this high to this low. And like I said, ideally you want to get in your trade in your long here in the discount. So honestly, this is not the best example because price was super choppy. We retraced a bunch of time. Notice the way like every time we tapped into equilibrium, we retraced a bit in discount, right? So ideally that's where you want to take your trade. And yeah, I would hate to be in the fucking long and wait for like 5 hours for this to finally reach my target, which would be this high, like I said. But hopefully this is a pretty good example for you guys to understand premium and discount, okay? Because that's all it is. That's like how the market works. That's how the algo work. It's just like it's in a premium, it's going to retrace into a discount. If it's going to push higher, it has to go in a discount before pushing higher, all right? And your role as a trader is to understand that. It's to understand, all right, well, are we in a premium? Are we in a discount? Is price seeking higher levels? Is price seeking lower levels, all right? If it's seeking higher levels, you want to wait for price to go in a discount, take your long, and sell in a premium, okay? It doesn't have to reach that high like we saw earlier or that low. So you want to take partials, okay? Again, in premium or discount, depending on if you're bullish or bearish. Hopefully that makes sense. You guys don't say much in chat, so I hope you I'm not yapping for nothing. Let me know. Okay, so next day, and let me know if you guys wanna like see anything else. I'm just like marking out John liquidities and shit. Okay, thanks, Messiah. But let me know if you guys want to talk about imbalances, a specific model. Like, let me know. Or if you're like struggling for some, I don't know, an ICT concept, entry model. Well, like, I don't mind doing entry models, but like, which one? Because there's a ton, bro. Like your entry model, in that case, let me know what it is. Let me know, bro. All right, next day. Let's see. All right, so again, if you go on higher time frames here, this is your swing high, this is your swing low, this is your dealing range.
Hola, everybody.
Hola, Masi.
Papi.
What is the question? What question, buddy?
I don't know, bro. Just keep yapping. Go.
Okay. Am I a good yapper?
Not really, but go on.
Oh, shit.
Yeah.
Okay. Forget entry model. I'm struggling to find original consolidation in market maker models. That's fine. If you want to talk about market maker models, it's cool, bro. We can do that.
Talk about
But
that.
we would ideally need so let me go get ES. Delete this shit.
Use that one.
With
Yeah,
Q.
use that one. Yeah.
You got
Use that one.
ES?
That's got yes.
Oh, cool.
Yeah, use it.
Sexy, buddy. All right. Damn.
It's market maker models.
All right. First, like, does everyone understand? Okay, I was gonna ask. Do you guys know what a market maker model is?
Go on. I'm actually interested, so teach me.
Oh, okay. I'll do that. Nope. All right. Cool. Oh. Okay.
Story of my
Market
life.
maker model is simply, well, a model obviously in price. Shit. How do I draw this? And essentially what it is, you want to see. All right. Let me draw it first and then explain. Okay. Cause bro, I swear to God, like drawing on this shit is hard. I don't know why.
No, you're just autistic, bro. It's not
Yeah,
fucking
there's
hard.
a little bit of that too.
Yeah.
Okay. Okay. Wait. Do I do a? Oh fuck. Bro, chill. I gotta think about this. Okay. Good. Okay. Okay. Damn, I cooked, guys. Perfect. So, let me finish. I didn't finish.
Is this like buy side of the curve, sell side of the curve thing?
A little bit.
I'll shut the fuck up. Sorry.
Okay. Test. All right. I'll do that with you guys. And am I forgetting anything? Yeah. I'll do what you said. Where's
Curve's right there, buddy. Look at the top right.
Is it? Oh. Why's your shit in blue, bro? That's ugly as fuck.
It's not. It's just this is your one, bro. Mine's completely different.
Oh. Why is it mine, bro?
I don't know.
It's weird because it's your account. Whatever. All right, cool. If there's no PDRA that's tapped on a higher time frame, would a liquidity sweep give you insight on what you should form your bias to? Oh, bro, this is a long question. What the fuck?
No, I'll answer it.
All
No,
right, go.
to an extent, yeah, but if a liquidity sweep is valid, it would leave displacement, and in displacement, there's PD arrays, right? So off of a liquidity sweep, you don't want to take trades off of just a liquidity sweep. You want a liquidity sweep to be valid via displacement, and then you want a retrace into something, into one of those PD arrays. And as Max was saying, ideally in premium or discount, and then you take it from there. I hope that helps, CBB.
All right. Just to go back to our model, market maker buy model and market maker sell model. You're looking at a market maker buy model. Okay. So, and how you identify that is, well, you go on the market, you go on your chart, and you spot out sell side. And if it's a buy model, like I said, you're going to anticipate a buy side. And essentially what the model is and how you find it, you will see an SMT at the low, and that will be your kind of like your shift in market structure. All right, obviously then you'll see a market structure shift, CISD, whatever you want. Okay, and then you'll see different phases. You'll have the first phase of accumulation here. Phase of, bro, I'm a fucking, there you go. Phase of distribution. Distribution. So right here, all right. And another phase of accumulation, because you can have several phases of distribution and accumulation. All right. And the last phase of distribution, I can just do this.
Is there no manipulation phase?
Sorry?
Is there no manipulation phase?
No. If you want, all right, if we zoomed in, bro, what the fuck? Oh my god, bro, I'm gonna lose it. I lost my shit, bro. Okay. All right, if we zoomed in this accumulation, you would probably be able to see some kind of manipulation here, some kind of sweep of liquidity, some kind of sweep of the lows. All right, you would have relative equal lows down here. That would make sense. And then you'll have distribution. So this could be accumulation, manipulation, and distribution. All right, take care, it's easy. But that's it. But this is not. This is different than AMD. Okay. And you'll have an SMT here. Okay, with ES. That's why I took ES as well. An SMT or liquidity sweep. All right, depending on what asset you're looking at. And yeah, essentially like market maker buy model. You had sell side right here. All right, so that's why I said sell side of the curve right here. And this is just going for every high here. So you'll see some kind of accumulation at some point. And this will be way more clear on the chart, obviously with the candles. But you're gonna see that, and obviously price is gonna seek all these highs here. And again, this is the whole. Where's my fib? Here, this is your dealing range. All right, from the high to the low, and then you have equilibrium in the middle. And ideally, you get in and the below equilibrium and the discount. Okay. And then there's like certain how to say that, like character, how do you say this?
Characteristics.
Exactly that. With my phases, like the last phase of distribution usually will have a lot of speed. So like if you're able to identify the last phase of accumulation, all right, before the high, and you anticipate this last phase of distribution, you know that there's gonna have a lot of speed here. Okay. So there you go. I'm gonna get rid of this. And let's go on our chart and try to find that. Honestly, it's not necessarily easy to find this. Oh, I just find one. Okay, never mind. Okay, I don't know if there's an SMT here, but there's definitely a liquidity sweep.
It probably is. Check it. I guarantee it.
I will, but I just want to show the different phases first. You would have your accumulation here. Notice that's exactly what I'm saying. Look at how this is just one candle on the hourly. And
Also that's accumulation one at the bottom, no? Look lower off of that.
This here?
Yeah, would you not count that as accumulation one?
Here maybe?
Or yeah. Because this is the hourly, right? So if you go on the 1 minute, that's just a bunch of accumulation.
Yeah, maybe here then. Yeah, more here. Here, yeah, I would agree. Or here too. But then again, you know, like you can like have fun like marking out all these consolidation and accumulation areas. But what's important is to notice and maybe this example is not the cleanest one, but yeah, you definitely see how there's accumulation here, accumulation here, accumulation here, distribution here, distribution here, and distribution here. And notice how fast this is. This is 1 hour. So in 1 hour, we're able to rally. Let me find my. Oh my gosh, bro. Is it this? No, it's not this. How do you? Where's the tool? I'm looking for the tool. It shows. Oh, here.
What's the tool? Ah.
This. We're able to rally 200 points in an hour. All
Wait,
right.
I'm gonna help you out with something, bro. If you wanna look for that, you just hold control on your keyboard and then do it. Oh, well, it works on trading view.
Yeah. Okay.
Or maybe shift. Or move shift. Try shift. There you go.
Oh, what the fuck. All right. Well, yeah, I'm not doing that. Lowest buy. Yeah, lowest buy would be down here. Okay. Lowest buy would be right after the SMT or liquidity sweep. So maybe in those candles here. You're right. That is also one of the steps for our model. Okay. And yeah, then you see all the distribution phases here. So again, you got your dealing range here. Oh yeah, I wanted to see if there was an SMT. But even if there's no SMT, it's not a big deal. Because this is still a buy model. How do you go find a... how do you go on the... Oh, here.
Guy's actually retarded, bro.
Oh, okay. Yeah, I don't think there's an SMT. But still, it's a valid liquidity sweep, so it's still fine. Does that make sense? I forgot who asked the question. QP. Okay? And then when you want to zoom in, all right, because again, like this is higher time frame. If you want to trade intraday, you've identified this model. You know there's a liquidity sweep here. So I actually mark it out as so. And you're anticipating this to, let's say you're trying to trade first day 2 of May, okay? So let's see here. Let's go on the 5-minute time frame. Let's say you're trying to trade this here. I don't know why the fuck you'd be trading at 8 p.m. though. So maybe not the best example. Let's see before.
You're on UTC -5. You're on UTC, bro. Go on UTC -5.
Oh, I am. What the fuck? Oh, this is way better. Yeah, but still. All right, let's say you're trying to trade a PM session then. All right, this is still bad. I don't care, bro. You know this is your accumulation phase, so you're just waiting for some kind of confirmation. This would be an order block here. If you want to take the 2 bodies of these candles here, notice the way the candles respect the upper half of the order block right here. All right. Displacement up, invert fair value gap here. Again, not the best because the candle closes below it, but still. Or you can spot out this invert fair value gap here. I'll get rid of this because there you go. Maybe that's better. But whatever, bro. If you want to take your entry here, for example, it works. Because you're like, what's important for you to understand here is that you're anticipating this rally here because you're expecting a another phase of distribution with speed. And that's what you see here. And you can target this high. Obviously, related equal highs up here. You can target this imbalance here. So you can go here and take consequent encroachment of that imbalance here or the low if you want. Nothing wrong with that as well. That would be a very low target. So maybe not actually. Bad example. But yeah, maybe the order block here. Because look, this is your dealing range now. Okay. Wait. What the fuck did I mark out? Yeah, there you go. I'll get rid of this. This is the dealing range you're working with. So the low of the market maker buy model and the high here, that's the one you're targeting. All right, that's the most realistic target in here. And well, you're already buying a premium, all right? But let's admit that you just wanted to trade a PM session and you had no other choice. That's fine. But then you can like target any premium P arrays in this area. So premium arrays. So yeah, this order block here. The high, obviously. The high of this fair value up here. Like all that stuff can be just, you know, key areas for it to take a partial. Oh. But hey, if you guys are interested by market maker models, There's a whole ass vid dedicated to that shit.
The lowest low.
So there you go. I hope it makes sense. Because I know I yap a lot. But like, yeah. And then again, let's say, well, this is Asia session, obviously. What the fuck is this? There's some kind of news here. Oops. What's that? I don't know what the fuck that is, but that's some news. But again, news is mostly just injection of liquidity. So there you go. That's why you have such a big move up. And this would be sell side of the curve, obviously. And this is buy side of the curve. Okay? Take a trade. I would like to see how you enter. Yeah, but like with what? Market maker models?
Saying going like the next day or something.
Or just like take a random mass trade, like with a random mass model and a random mass entry model. Any trade? Okay. Well, again, I don't have all my tools. I can look at the regular trading hours. I can look at all that stuff I usually use, but you can try. Nasdaq, right? I think we'll end it here, guys, because it's been already 15 minutes. So if you, unless you guys have any other questions specific to ICT. But yeah, all right. Daily time frame. Sorry, that weekly time frame, because I don't know. I got lost here. Trading May? What the fuck? Okay. Week looks pretty bullish. We had a very big ass retracement into this weekly fair value app here, bullish fair value app. Daily looks pretty bullish as well. We are actually right now in a, what day is this? Wednesday. Bullish fair value app on daily. We were able to invert this fair value app, so even more bullish in my opinion. Okay, 4 hour time frame. What time is this actually? Let's go to New York session directly. Oh, perfect. Okay, so we're able to respect this BSC here, buy some balance, sell side inefficiency. I just went to the, wait, what time is this? What the fuck? Bro. Oh, I'm retired because I'm on the 4 hour. All right, well, what the fuck? You guys saw that we were bullish, and yeah, essentially we're correct. So let me do this again. My bad. All right, still bullish on the daily. 4 hours still pretty bullish. Not much to say. Early time frame. Not much to say. We retrace into this order block. I don't really have any specific targets at the moment that I see like that. So interesting. 15-minute. We have this fair value up here. That's bearish. We are in this order block, so I'm definitely going to be waiting before I take anything here. I'll mark out the open. 5-minute fair value up here. All right, I got key levels here drawn out. Again, I don't have any new weekly, daily opening gaps. I cannot use the opening range gap. So essentially, like, the way I trade is going to be a little different here because I don't really actually trade like this. But let's see what we can work with. All right, so pretty bullish. This would be your first presented fair value up right here. Get rid of this for more clarity. 5-minute fair value up here. So again, bro, I need to shit. This is a discount fair value gap. We stay in the upper half of it. It's looking pretty bullish. We got relative equal highs up here. That's the buy side I would be looking at. Let's see. Oh my god, bro, we smashed that shit. So no entries here for me personally. Let's see if there's even a point to look for another trade today.
Alright,
Alright, we got this high here, rejection block here. I'm gonna mark this out as well. Those would be could be drawn liquidities. Oh, goodbye, Messiah. Alright, retrace. At this point, honestly, it's like this would have been my main target, so it's like I'm okay to trade, but let's see. I need a setup. All right, rejection block here. Let's see if we get some bearish movement. If not, I might just go for the high. Okay, pretty bearish. So first presented for value gap. So like this is the thing. Early time frame kind of reacted off this bearish rejection block. Rejection block. It's just the candles here. So think of it like a bearish order block. Okay, that's all it is. We failed to take this high. I'm not gonna like look on ES if we have an SMT here, but what would make sense here is like I could see price retracing back into this first presented for value gap and even go for these lows, right? So we got this for value gap here. So I have some kind of rejection. Could be open to take this, but this would not be an ideal trade for me. I would not be extremely confident about this. This would definitely not be my A+ setup because my previous and my drawn liquidity where I was more confident were before and were taken already without giving me a setup. So I'll just take this and see. But we got a rejection here. I like the way we reacted here. Okay, first presented fair value gap. I'm actually fucking cooking, guys. I would have my stop loss to break even because at this point we could see, and I'm actually going to be a man of my word and take a partial here. So I'll take 75% partial here because we are in the first presented fair value gap that I said would be a drawn liquidity. And I want to see if price is able to go lower. I want to see if we're able to invert this fair value gap. And if so, I'm expecting price to retrace back to the lows here. So, okay, we invert that. I want to see if price came back into the fair value gap here. If we're able to push lower, obviously and to use this as resistance, that's looking extremely good for my lows, for my targets. We're able to do that. There you go. This concludes today's.
You see what I said? Wait, you see what I said there? I would have cooked you even more there, bro.
Oh yeah.
Look, why is that fair value gap an important fair value gap? Anyone?
What's that?
The what? You mark out that fair value gap on top of it? Above.
This here?
The one above that one.
This?
Yeah, why is that one important? Andre, you tell me. Broke the low, right? So you see how we came up into that, and if we're truly bearish and that's truly drawn liquidity, that's a pyramid spot.
You know what that's called?
And look, did we tap into it?
I think it's equal highs. Yeah.
Oh, that's so gay. But if we were to have tapped into that, that would have been a good little.
I was gonna say though, like because I repeat exactly what you said. Yeah, broke the low.
That's right? The first fair value gap after breaking the low.
Well, okay, but I mean,
or
not
offer like a
liquidity
sweep or anything.
But I would call it a breakaway gap.
This one? Yeah, this one's a breakaway gap. Yeah. But if we re-tapped into it, it wouldn't be a breakaway gap, right?
No, but like whenever you identify a gap like that, a breakaway gap, like you're not expecting price to retrace back into it. And notice well, yeah, but then like I said, you're explaining something different. But it's like different stuff. But I'm just saying in this case it would be a breakaway gap.
Because in that case it's a breakaway gap. Yeah. But it would have been an important fair value gap if it was re-tapped into.
Agreed. So yeah, and notice how the body stayed in the lower half. That just shows how bearish it is. I'm just saying for everyone else. Okay, well that's a good way to conclude this little backtesting session, guys. I've recorded this. I will upload it to my YouTube channel. So if you guys need to go back to it and see something I've explained again, like I'm not fucking ICT, unfortunately, but I can definitely explain his concepts a little bit and at least guide you to his vids if there's something you need to dig in a little deeper. All right, cooking with Max, yes sir. Appreciate you guys. Trace important for value gap. So for value gap made after a higher low is swept and considered an important for value.
To me, yeah. So that fair value gap there, that he marked out, the one above, because that was the fair value gap that was formed after breaking that low. If that was truly the drawn liquidity, then that if we do come into that fair value gap, it'd be important because either we'd have to respect that for that to be the drawn liquidity. So for example, if I'm in this trade here, right, and say I haven't set my stops to break even, and if we were to have inverted that fair value gap, I would have been out. Do you get it, CBB?